To give us further analysis on market movements for the day, I'm now joined by Johny Lambridis, investment analyst at Element Investment Managers. Thank you so much, Johny, for joining us today.
Pleasure.
Much appreciated. So we have seen a bit of positivity filtering through, optimism ahead of the vote coming through in Greece. How important is this vote? And do you think that we are starting to see investors saying, well, it is done and dusted, that Parliament is going to vote in yes for the austerity?
I think the Greece Parliament will probably pass the austerity measures. I guess our thesis has been for some time that the debt doesn't go away. So, guys like Pumko...
You're just spreading it over 20 and 30 years.
Yeah, and guys like Pumko have said for a while that, Greece is ultimately going to land up with more debt post the austerity measures than they did have going into the austerity measures. So, the debt will remain, and I think it'll be a millstone around Europe for some time.
News just filtering through, it seems that yes, we've been hearing about French banks wanting to roll over the debt over 20 and 30 year periods, and German banks might be doing the same, but it seems that they will only be doing this if credit ratings agencies do not regard this as a default, because they have actually come out and said that any voluntary rolling over of the debt means default.
Correct, and I guess what you've got now is also a sort of transatlantic situation playing out between the banks. A lot of the CDSs have been written by the US banks, who obviously don't want this thing to be called a default, because otherwise they would have to pay.
Yeah.
And obviously the German banks would want to get paid out if in fact there was a default, so they could cash in on the insurance that they bought. In
the meantime, we had 10.8 billion rand passing through the market today, slightly higher than yesterday, but pretty benign at this point in time. And we only saw one loser on the top 40 today, with MTN down 0.6%. So do you think investors are at these levels saying that the market is offering quite a bit of value? Do you think that they're looking ahead and looking past possible defaults and debt scenarios that are playing out in the Western world?
Look, I guess if you've been on the sideline in the South African equity market year to date, you could probably get in now at sort of cheaper valuations, 5%, market's down 5%, earnings have continued to grow. So the market's looking slightly cheaper, but still not offering compelling value at these levels. Volumes are down, but I suspect we're also getting now to a situation, particularly after the Greek austerity vote, where I think a lot of Europeans will go off for their summer holidays, and we could see volume taper off a little during the month of July.
African Bank, we've also seen a bit of volatility, and it's quite interesting to compare the likes of African Bank and Naspers, because we've seen very similar moves where we see strong moves to the downside and then strong moves to the upside. ABIL up 3.5% today. Any specific reason that we have seen quite a bit of volatility? Does it really hinge on what we could see from the South African consumer going forward?
Yeah, I guess they're very much linked to the sort of SA consumer. It's been quite a volatile stock of late. It got up as high as sort of 37 before their results, which seemed to have disappointed most in the market, and it's come off quite a fair way. At around sort of 32, below that starts to offer value, but I think early in the year it was probably discounting too much good news.
Would you be buying at these levels though, 33.75?
No, not yet. We still think there is probably better value in other counters on the JSE.
Again, Massmart's Walmart under the spotlight. We know that Walmart has come in with aggressive price cuts going forward for consumers.
Which will hurt the likes of ABIL as well, given that ABIL now has a big sort of furniture component as well through Eleni.
It's amazing the domino effect that could occur through this Walmart issue going forward, but it could be positive for Massmart. We have also seen quite a bit of volatility in that Massmart share price, a bit of selling. It's recovered quite nicely today, up just over 3%, closing at 134 Rand and 11 cents.
Yeah, I guess you had a lot of sort of merger arbitrage charges in that stock ahead of the payment by Massmart, and I guess we're now sort of trying to work out who's exactly going to hold that stock going forward. On a 20 times forward P, it doesn't necessarily look that cheap. I know some of the foreigners seem to like the Massmart Walmart story, and they probably are the biggest investors in that at this point in time.
We had Truworths also gaining ground, up 3%. Richemont following suit there, up 2.5%. So we're seeing a bit of a play today on the consumer side of things in South Africa.
Yeah, Richemont sort of has been buoyed by very strong news out of China, and there's been a couple of IPOs of other luxury goods companies in China as well, which are probably one of the few IPOs that are actually holding up reasonably well, are the luxury goods IPO, and that's probably filtering through into Richemont as well.
We had Harmony also gaining ground, up 2.5%, and as I mentioned a little earlier, Fitch Ratings obviously will not be embarking on grading the company going forward. Harmony's also had its share of volatility. The question is, do you buy in at 86 Rand a share? And at a time when not too long ago it was edging so close to 100 Rand a share.
Yeah, I mean, if you look at that graph, it went vertical sort of first 2 weeks of April from sort of 80 to 105 at one point on the Wafu Gold project in Papua New Guinea. We like gold, but we think Anglo Gold or Goldfields are much safer bets than Harmony.
Let's just look forward. What is your major play when it comes to the overall market, Johnny? Are you being cautious? Are you sitting on the sidelines? Are you watching with bated breath what is going to happen in Greece and the US and US debt ceilings? And
I mean, it's still fairly cautious. The debt's not going to go away. We can't see how governments are going to get out of the hole that they're in without stoking some kind of inflation. So we think in the balanced portfolio, you probably want to have some index-linked bonds. In equities, we favour the defensive, the gold. Some tobacco wouldn't hurt it at this point in the cycle either.